Good morning, everyone. Welcome to Wednesday. Is it Wednesday? Did I get the day right? I'm your host, Marcus Okadi. This is the metal markets on Topstep, of course, and we're going to have a look at what the levels are doing today and some early look of how the price has behaved overnight. Okay, as always, we're going to start on supermassive time frames. So I'm looking at the weekly charts here. And so far, it does seem like the metals have turned bullish. Now we're halfway through the week. We do still have another couple of days of trading. We also have NFP to get through. And NFP is falling on a Good Friday, which is super weird. But yeah, so far, crude oil is a bit messy on the weekly time frame, but definitely gold and copper seem to be having a bit of a skew upside. Let's also have a look at silver. Silver very similar to gold, maybe a little less bullish, but still trying to do that morning star 3-bar reversal, however you want to name that. Let's have a look at the daily chart, and then we're going to move into the intraday levels to get a zoomed in view of what the hell they're trying to do today. Alright, daily chart copper. Looking like it wants to track through the single print that we created on the 18th of March. And similar stuff to gold. So yesterday when I looked at that, I said there's a good chance that we start moving back towards this. I mean, if gold carries on higher, just looking at the daily chart, there's not much in the way until we get to about 5,000 and maybe a little bit above. So depends on whether that sentiment holds into COMEX. Crude oil on the daily is trying to reverse downwards. Now the reversal was a bit suspect at best. I know that some people would look at this and go, hey, it's a bearish engulfing, but I actually go a little bit deeper to classify whether the bearish engulfing is weak or strong. I would classify this as a weak reversal, and right now they're battling around the round number of 100. Copper is currently slightly negative when I look at how we're moving on the day. So gold is clearly going higher, copper currently going lower. So not much to see there. Let's have a look at the 4-hour time frame. Just scanning to the left here on gold. Again, same thing, you know, we're tagging this single print from 19th of March on gold and currently creating a little wick there, so that's interesting. Crude oil is still subject to a lot of headline risk. I think everybody's kind of waiting pins and needles to see what's going to happen with Iran. And the 4-hour time frame on copper sort of looks a bit bull flaggy. So even though we're kind of going down, 4-hour time frame, this downside movement just looks like an intraday liquidity grab to me. Alright, so the drop down would be pretty clean if we ever get it. Right, going into the 30-minute time frame, and now we're going to switch on the intraday levels. Now there's a few of them, so don't be scared. We're going to talk it through. Let's have a look at gold first. Across the board in metals, Asia was pretty muted. So the ranges have been, even though it's a massive range, right? But just looking at it, how normally Asia, how much Asia moves normally, this is comparatively a small Asia movement, right? And for now, again, seeing that wick above the Asia high, Tokyo high, and then now fighting around that point of Tokyo close. Whenever I see this, I'm always on the fence of where they're going to take it, so I'm going to see more information. If I look at the options chain, there's a couple of chop zone levels, and the reason why I call those chop zones is because the two levels have equal amount of open interest and they're super close. So that never really leads to smooth movement through those kind of areas, because you will have hedging happening all the way. And even though the whole area is about $75, that's nothing considering the average ranges that gold is currently doing. So if I look at the averages, they're very far away. I think that gold is maybe going through a bit of a stabilization when it comes to the implied volatility. So we have stayed stable in light of yesterday's movement. So maybe the movement we saw on the previous day is pretty expected. That's one of the ways to look at it. The London initial balance is still not popped either side on gold. It is still firmly inside of it. And again, until that resolves, for some of my bigger trading decisions, I want to see what they want to do with the London initial balance first and foremost. Now, to the downside, you will see the gamma call wall down at 4,600. 4,600 as a level has been around for quite a while now, but that is also where ADR low is located. Quite far away, right? Don't know whether we're going to get there. Something that is much closer is obviously this Asia low, but also the previous day value area from COMEX. This is the edge of value, sitting somewhere around 46.77, 78 maybe. And anytime we are decently far away, but not like screaming all the way, like sort of like 20% away from it, there's always a chance of a mean reversion down. If we don't get an earlier attempt at a mean reversion, I would be looking for a continuation with this open. It just remains a question of where we want to take that. So we have a smaller support area somewhere around 47.36, and then really nothing until we get closer to this Asia low. So gold is in a precarious situation here. To the upside, ADR high is all the way at 48.65, so plenty of space. What do we have levels wise upside? So we have 4,800 is kind of a moderate call wall, and then 5,000 as the top gamma wall. So all very, very far from here. So yeah, a bit of a quiet start for London gold, not unusual. Whoops, didn't mean to move that. Let's move it back. And let's lock that. Moving on to copper. I think copper looks a little more interesting. Let's expand this a bit. Copper is also opening slightly above the COMEX value. And we also have a weaker put wall, which was a stronger put wall yesterday at 560. That got reached overnight. I did take a decent chunk out of this move yesterday. And I took some from crude oil as well to the downside. The news definitely helped that. But yeah, it was kind of a quiet day until the moment that we got some news. So again, that headline risk is definitely something to pay attention to. So have your financial juice open and make sure you don't get involved in like shakeouts. If you're already in a trade and it goes your way, brilliant. If it doesn't, just stay out until you know what exactly is happening. You know, some people have said, oh yeah, Iran has been giving day trading advice and stuff. Oh, fade the downside movements because it's like attempted at manipulation. That certainly seems to be true, but you know, we do have risk to manage. So you know, when you see a massive smash of like 400 ticks in the space of a few seconds, you know, how do you control the downside risk? Well, You don't really. You would need super wide stops. So to me, that's like playing with fire. But that's me, right? Okay, let's have a look at the initial balance for copper. So I'm just going to put a couple of markers here. Let's move that out of the way. Okay, so these two blue lines are roughly your initial balance high, initial balance low. You can see that we moved lower through that. We do have Tokyo low tagging, so I want to see whether they want to push this further. Is it a breakout or is it just a liquidity sweep of Tokyo low followed by a further rotation upside? If I take into account the developments from the daily and weekly charts, maybe we can consider further upside, right? Especially because gold is sitting right at its own Asia high level and trying to decide what to do. But we are coming into a bit of a precarious time of day where the volatility starts to increase as we get closer to COMEX open, and that can mean some jumpy moves, and we need to be aware of that, right? So, you know, nitpicking on stops and even maybe using this sweep as a downside risk limiter, probably not the best choice. We have a bigger level at 560. So if anything, I would like to see them shake it out down to 560, maybe a little bit below, and then reverse. So that's definitely one option. For the continuation move down, I do not want copper to re-accept the Asia range. Asia range is small, so any kind of rotation through it is probably going to happen pretty swiftly. And how big is this? Let's have a look. And the Asia range is like pitifully small. It's like 70 ticks barely. So yeah, that can't be the thing to base my personal trades on. Alright, when I look to the downside, ADR low is sitting way down near the gamma wall at 550. So if this turns out to be a whole fake out, upside move, dead cat bounce, however you want to call it, then, you know, definitely looking at point of control from yesterday as a potential target. Otherwise, we'll be looking for a continuation higher. But I'm always open to both sides of the story. I, as an intraday trader, don't like to marry any particular direction. I just have my levels, see what the TPO profile is looking like, and then I make my decision. So for now, it's a little bit iffy. Alright, let's have a look at crude oil, because crude oil is playing some tunes and everybody's dancing to that, so correlations are pretty strong. Crude oil is the market for these kind of situations. True micro, but the ranges are still sitting on average about 730 ticks per day, so tape bombs are everywhere, you know, so make sure you don't get caught up in that. I took a tiny chunk of this shakeout down. Unfortunately, I had to go and deal with my King Charles Cavalier. It was a bit elderly and it wasn't having the best day today, so I had to kill that. But we're still slightly up on the day, and now we're going to see whether we can get another setup here. The NYMEX value is the edge is sitting just under 101. At the moment, we have this large call wall at 100. Now, here's the thing. Whenever London extends the initial balance higher and we have a potential for a bearish daily chart, I want to see if I can get a shakeout lower, but just beware that after the shakeout, if it does come, NYMEX tends to create a new session high, okay? Just a new session high past London high. And Asia ranges are never really that great on crude oil for like liquidity sweeps. It is basically just a point where if it's early enough in the day you might actually look for a break out of that range and then a further move outside of it that gets a little crazy. We are getting a little bit of a battle here now. So the shakeout to the downside is one of the things that I like to look at on crude oil. I'm only going to use one micro because, again, I'm expecting further upside movement, and we do typically see the test of at least somewhere inside the initial balance during this time on a day when we have a slow crawl upward. Sometimes it's pretty deep, but again, I'm gonna go for a super small size, large stop of 120 ticks, and then just aiming for about 200, roughly 250 ticks profit. So very small, very controlled. Why? Because I already have a pretty decent week, and you know, you don't want to mess that up, right? So we'll see how deep this reversal can be. As always, I have my book map on the other side, but for Topstep X, I do stay on the 30-minute time frame because it allows me to not get like zoomed into super small time frames. But for now, we're seeing some weakness around that 100 level. Is it going to last, or is this going to be another fake out below it and then they whip it upwards? Well, we don't necessarily want that. At the same time, in the same vein, crude oil is very whippy and very jumpy. So I am using a pretty wide stop just in case they want to mess around with it too much, and I don't want to be nitpicking on stops and then not getting the move. I would rather get stopped out on a smaller size and control risk than not be in the trade setup that I'm planning, because I didn't want to use a larger stop. Like, I caught myself doing that a couple of times in this XFA, and I'm very aware that that is not the way to do things. So all right, let's have a look at chat and say good morning to everybody. Raphael was here first, along with Bruno, and I hope you all read the risk disclosure. So this is not a signal service. Do not follow blindly. There's a pretty decent delay between the real time and the actual YouTube stream, so that wouldn't work anyway. And Kenny is saying good morning, let's all have a good day trading. Well, don't come into the market with expectations, you know, just stay open. You don't know whether you're going to have a good day or not. Just try to do best in the moment with the information that the market is presenting you, and control risk. Now, you guys know I don't like to trail my stops. I commit to the risk because my risk is always somewhere at heavy invalidation points, and then if that happens, well, it happens and I'm wrong, and it's fine. I have no problem being wrong. I shoot for slightly larger trades, and if we go through my stats while I wait for this to resolve itself, currently sitting in just over 2R for the overall average win loss, and Jesus, say that 10 times fast. Is that a tongue twister or what? But as a result, my trade win is a bit lower, so it's 48%. I'm absolutely perfectly happy. So I'm aiming for a smoother curve here, and I've changed quite a few things in respect of how I approach the prop accounts this time around. Because I have one way of trading my own accounts that have much bigger capital, and prop is just not like that. So you need to try and maximize the upside while minimizing downside, and that is the name of the game. Very long hold times, as you can see, average trade duration 114 minutes, average win is larger than the average loss, and all pretty decently controlled. If we look at the first few days, you will see that I started super slow, had a great day on Friday, decent day on a Monday, and a decent day on a Tuesday, so obviously we need to try and protect that. And if I'm getting involved in something that is based on just the situational awareness and statistics, during this time of day, the stats tend to be a bit shaky, so they tend to be heavily skewed towards like the coin flip, so 50-50. But the mean reversions usually have more legs rather than continuation trades. So for the continuation, I really want to look at that later during NYMEX. Once the volatility of the first hour of NYMEX comes out, I usually let that go. I very rarely trade the first hour, and sometimes, actually most times, even 2 hours. So, all right, trade the fade is saying new day, new dollars. Let's go. Yep. What is the crime is saying good morning. Genius K is here, so we got some usual suspects. Roland is here. Marky, Keith. Leah is here. Hello, Leah. Good to see you. Jack is asking, anybody seeing issues with trader rate? We don't have trader rate, so I wouldn't know. R1, S3, these usernames, man. Why did YouTube do this? I came across a lockout feature that would let us lock out Asia, London, and New York, but can't find it anymore. Was it removed? No, it's still there. If you go into... Oh, maybe it was removed. I don't know. I think it's somewhere else now. But you can control the times of those markets and lock yourself out using the custom lockout. So you can still do it. I don't think that feature ever worked properly though for me, because I tried to go into, oh, let's lock out London, and then it would lock me out all the way to like 4:30 p.m. London time, and I'm like, well, no, I still want to trade from like 3 p.m. So I always use like a custom lockout. Maybe it's somewhere in the risk settings. Let's have a look. Don't see it. Is it here maybe? No, that's just a trade clock. I don't know where they put it or whether it's still there, quite frankly. Trading Raw CPT says, hey. Eloise has joined us as well. Encrypt saying, getting ready to take my daughter to the bus stop. I wanted to drop in to say hello. Thank you, and saying hope you have a good day. Yep, let's see. Trading Raw is saying excellent work on this XFA thus far. Well, we'll see. It's still early days, you know. It's very early, very small sample size currently. Tyrone is saying good morning. We have Andreas, Lebecker, Tiller. Everybody saying good morning. Asking me whether I looked into ICT. Look, as a coach, I have to know stuff that's out there because people will ask. I'm an old prop trader, right? I've been in the prop game since 2013 when I was learning about the prop, and I've been trading since 2007. So it's been a while, right? ICT I never even heard about ever until literally the last few years when everybody started wallpapering me with ICT concepts. And then I looked a little bit deeper into it and realized that all of the concepts are pretty much recategorized from older concepts, but that just doesn't interest me. I use market profile, I use my own strategies that I've tested over the last 20 years, and I use options levels to help me figure out what the dealers might be thinking about and where they're going to hedge. Anything else is just down to whether the dealers step in, and how that looks after the fact, I couldn't care less because I'm using real-time order flow for that, right? Why not use bracket orders? I am using bracket orders. What are you talking about? OCOs are brackets. I also want to define risk. I don't know whether you're asking about position brackets, but I don't like dragging things because that means your risk is not defined. Like if my risk model says, hey, today you can use 1 micro on 120 ticks, with a 2-hour stop because that is within the probabilities of the setup that I'm doing. If I enter a trade without a preset bracket of 120 ticks and you start dragging things around, on crude oil with this volatility, that could easily turn into 150, 200 ticks, or 85, or 100. And then your entire data-based model completely messes up, right? Do I have a rule on how many trades you can take a day? So I work off of day trading time zones. I don't necessarily look at, hey, today I need to do only 3 trades or only 5 trades. I do have a limit per the time zone, but then I don't trade in between. So I guess that's the difference, right? And I don't really struggle with super over trading or anything like that. In fact, to me, unless it's a range day, I would be thinking, you know, maybe if I've done 13 trades on the day, I would be, you know, finishing the day and going, whoa, that was a lot of trading. But I don't, you know, I don't really go into like complete Muppet modes. Usually if I'm flipping and flopping around the same level, like long, short, long, and then on the third trade, I just go, whoa, hold on a minute, is this a range? And then I go into an introspective questioning whether, you know, it is a range, whether my trade location actually works here or not. And then I wait, and I typically wait for another 90 minutes after that if there's still time in the day, and then I come back, because by then you have some new price levels, you have some new areas that you maybe want to look at, and the price, if the price is still in the same area, then I'll be like, okay, well, this is not the day for bigger movement, then let's see what we've got, and then I try and get a range trade, and then I'm done. So personally, you know, after all this time, I don't have a problem with being wrong, and most of the time it's all very controlled. Most of the time it's the fact that the market is just not doing what my analysis is saying, and I don't get trapped in the ERN, which is error-related negativity. I used to. Nobody's immune from that. I used to be very upset if I would like lose a trade. We're talking some, like, I don't know, maybe 12, 13, 14 years ago. But once you realize where that's coming from, you're just like, that's just so stupid, right? Because it's all about probabilities. One day a trade will work out, another day it won't. Maybe you come across a time when the same trade, same conditions, same everything will be in an unevenly distributed distribution. So, you know, you might have like something that works 70% of the time, but you run into a couple of days or 3 days where you're stuck in a 30% time. So from your perspective, it's 100% failure, but actually run the same strategy over 50, 100 trades on the same conditions that day, and the probabilities even out over time. Everything is like over time. Nothing is like just one trade. Nothing is one day. Even 1 week is like a very small sample size to base your success or failure of something, of an approach. So, yeah. All right, let's have a look. Pastor Daniel McGuire says, good morning, trading from Germany. Hello, good morning. I actually have a market stalker in Germany. Chris. Zach is saying, following the last 2 weeks and enjoying your input, do you have a personal YouTube channel where you also live trade or only Topstep? So I actually have my YouTube channel Market Stalkers since 2015. If you scroll back long enough, you will see me looking like I'm 12 years old with a massive purple hair. Why? Because I was still a rock musician back then and still relatively active as a session musician. But that all kind of came to an end when I decided to go into prop professionally. And it just became impossible for me to, you know, hop around the world during the week and then try and be in the office super early. So I chose trading at that point because I was a session musician for roughly about 20 years at that point. I started super early when I was 14. And yeah, when I became a prop trader, the cash that I was making from session musician stuff I mean, for some people it might have been, oh wow, you were still, you know, very successful. But to me, it just didn't make any sense, right? Because I was making more in a trade that half worked than hopping to like Italy for 3 days overnight. So, but yeah, Market Stalkers is my YouTube channel. I don't do too many lives. I do one live on Thursdays. For the last 4.5, 5 years, I've struggled with some health issues, so that limits my energy quite a bit. And so I'm not the most active over there. I'm pretty active on Topstep, and you will also see me in group coaching today at 12 p.m. Central, which is 6 p.m. London time. But yeah, my own channel, one live stream a week. I am lining up some, because I'm trying to shift focus on that channel from like all the prop drama into more like platform reviews, tools reviews, because I have a software development company and we create our own tools that are either profile based or, you know, statistics. I actually have one that scrapes the options levels, and then I have a proprietary way to weight them, and then I use them as anchor points, which is what you see on this chart as well. But yeah, I've had a YouTube channel for quite a long time. The Righteous One's asking me how I'm doing. Yep, I'm doing alright. Like I said, my Cavalier had a bit of a weird morning, so I got a bit upset about that, I won't lie. So, but he seems to be fine now. He hasn't coughed or anything, but he won't eat. So it's been a tough few days for everybody. Gamma levels are goated. I agree. Yeah, I agree. It tells you whether dealers are likely to engage. Do you know how Hoag's magical weekly kickoff levels, how they work incredibly well? Yeah, that's one of the reasons, because he uses a combination, like it's his own combination, right? Some chicken bones, as he likes to call it. Chicken bones, whiskey, options, levels, support and resistance, and profile. And I don't know how he does it. He smushes them all in. My process is a little bit more simple than that and a lot more numbers driven. So I'm not going to tell you what the proprietary calculation is, because it is proprietary, right? But let's just say I have a way to sift out the smaller levels that may not mean much, and the bigger anchor points that are very likely to either cause a reversal, even if something runs through them massively, or a nice kind of acceleration through them, depending on the context. I want to say that today, pretty much across the board in the products that I'm looking at here, we have negative gamma. Now, what does that mean? It means that the levels are probably going to be overshot before they do anything. And it also means that the entire market state today is pretty volatile. So that means that if you have a level at 100, they will very likely try and overshoot that, then mess around, and then make a decision whether they're going to reclaim it or ultimately roll over the price. So some leeway, and looking at all of these levels as a zone rather than just like any singular price point where you want to be like hyper accurate. In a negative gamma environment, that is not really the right approach at all, because they wag through them like crazy, and yet they still reclaim the level and carry on. So it's like, okay, great, they've just kind of smashed through the level by about 1 million ticks, but it still worked. It's like, well, it didn't work for me, right? So just be careful of that in negative gamma environments. And literally it's everywhere. It's in copper, it's in crude oil, it's in silver. Is it in silver? Hold on. Yeah, in silver. Equities might be a bit different. Let me have a little gander. No, that's even negative gamma. ES negative gamma. DAX negative gamma. Everything is negative gamma today, guys, so it's all a little bit jumpy. R1 says, I have bracket orders set to stop loss and take profit of 100 each. Yeah, I don't work like that. Each product for me has its own designation, so I cannot work off of a blank. Because remember, I trade multiple products. Sometimes I trade RBOB, sometimes I trade crude oil, sometimes I trade copper, other times I might trade gold, sometimes I would trade silver, other times I would trade heating oil, and each one of those has its own risk allowance, which is not, like, it might be similar in dollar amounts, but the ticks are entirely different, right? So one, like, let's say on copper, I can easily run a trade that's going to have a 55 tick stop, easily, right? But on the other hand, something like crude oil, you put up 55 tick stop and, you know, you will be just wondering where your trade went, because this little range that it's creating here, it's 116 ticks wide. So unless I snipe somehow the very top of that range, which is not really my style at all, it's very unlikely that a 55 tick stop is going to survive. So for me to set it based on just dollar amounts, it's not the risk model. To me, risk model is not a dollar amount thing. It's like tick based and very much individual to each product. So if I show you my brackets here, my OCOs, I have a whole bunch of them set for individual products. I have one that's like a more general if I want to use like a smaller stop loss in a quieter environment. Certainly not now, but yeah, it's just not for me. You know, it might work for somebody else if you just trade one thing and you're always using a similar size stop, that's fine. But we're talking headline risk, we're talking volatility that is like, you know, 1,000 ticks one day, but then another day it's like 300. And I want to be able to scale my stop losses to the volatility of the product, not just some arbitrary dollar amount. Can I explain my options data that I use? It's just raw data from an API, and not cheap, unfortunately. The raw API data costs ballpark for multiple products close to $2,000 a month. So it's not really that. It's a bit cost prohibitive if you're not already making cash from trading, and quite a lot of it. So, what is the blue indicator at the bottom? It is a correlation quotient, and I put those on at times of headline risk to track how the correlations are doing on the day. So here I have gold, but I want to see how it's correlating today with the S, because we've seen positive correlations, so I want to be aware of that. But I also have gold and crude oil correlation, which is this one here. And then not sure whether my face is probably blocking this one, but this is a correlation between copper and gold, because I want to see how much impact gold movement has on copper at the moment, if I'm going to run any sort of a trade from that. And I don't want to get caught up in thinking, hey, they're going the opposite way on the daily, so therefore that's going to stay throughout the day. Now, as we get closer to COMEX and NYMEX, correlations very frequently flip intraday. So this is the headline risk. This is a headline risk thing. Andreas says, so nice to wake up to your stream. Beautiful and smart. Thank you for that. Don't feel particularly beautiful today, but yeah, most of us should try do the best that we can. So yeah. What is gamma? Gamma is gamma exposure. There are levels taken from the options chain where the market makers, dealers will engage to create a lot of transactions for those of us who are trading under sort of the retail umbrella, so that we can have super tight spreads. Contrary to popular belief, market makers are not big bad wolves who are just there to hunt your stops. But if you place a stop at a stupid level that's very obvious to everybody, then it's going to get taken, and it's not really a market maker being bad or having like a malicious intent. They're just doing their job. They're going to the point of the most contracts and then filling their orders and maybe then reversing things. So you need to stay away. Like, this is where the dome helps. Not a micro dome, but let's have a little glance at the big dome. Big dome. Let's scan up and down. On a lot of the commonly traded products, Topstep allows you to have 100 levels up and down. So if you start scanning up, you will see that there's really not much liquidity currently higher up. That can change. Dome is dynamic. But if I'm just scanning to see where the most contracts are, I see 105 is the first one where there's any kind of significant amount. But even 77 contracts of crude oil, I wouldn't consider significant. I would consider moderate. I would want to see like over 100 contracts somewhere. So let's scan downwards. Let's see what we have to the downside. So 44 at 98. Again, small amount. 37 and 97. Where is it? Where is the liquidity? So something at 93.10. 67 contracts at 92. I mean, they're probably going to be around 90. Yeah, so there they are. Now, look at what I've put on my chart. What's down at 90? It's a gamma wall. And we have 92 contracts for now sitting there. Who do you think that is? Is that your mate Dave down the road trading on his sim account? Probably not, right? It's either going to be a commercial hedger or it's going to be a market maker, right? And they have identified that that is where the open interest is currently. And that's where they are. So the biggest level by far at the moment is that gamma wall at 90. Now that could shift as NYMEX starts trading, everything starts shifting, and then everything kind of becomes a little bit jumbled, and suddenly you have new players. So that's the time to go back to the big dome or the main contract and then look at what's changed. And you know, usually you will notice that the gamma levels that I place, if they are of great interest, they will show up on the dome. Funny how that works. All right, let's go back to microcrude. John Hoagland has joined us. The goat. Good morning. Good morning. He's always so kind. You're a lovely person every day. Thank you, Hoag. Thank you. Andrea says you should sell some subscription to my gamma levels. We already have that as a part of the Blantec Discord utility. It's not a community. It's just a utility thing where we print levels. That's there as a part of our YouTube memberships that gives you access to the Discord and to one of our indicators called Blantec GL. You have to be on Blantec all to get those. And we literally just started that very recently. For all the others, we are printing market profile levels, ADR and ASR levels 2 or 3 times a day, depending on the market. And then we have another channel where I'm currently posting manually every day. So that's my life. Yeah, get up, get some data, post things, make sure everything's working. Ben Staples is saying good morning Ben. Andreas is also asking, do I use Bookmap? Yeah, I do actually. There it is on the other screen, hiding from everybody. But yes. Take profit to 90. Oof, wouldn't that be nice? No. So because we have some other levels, we have 97, we have 95, and also the context of London taking the market in a bit of a crawly way upside. Even though that means that NYMEX has about an 80%, let's say over 80% chance to take the NYMEX session to a new high past London, usually around this time of day, there's a very strong, like 64% chance, which is odd for this time of day, to have a strong probability skewed asymmetrically to one side, that we're going to have a deep pullback somewhere down to the initial balance of London before they continue, okay? So this is why this trade, I've talked about it before, where if London takes the initial balance on crude oil higher, usually to me that is a cause to do some sort of a fade, and then to jump out if I do get some ticks, and to look for a reversal later on in the day. That is what the setup is. The fact that we have a massive area of 100, beautiful round number, also a large call wall, also VWAP, right? So we have some confluences here that, you know, are not bad. But at the same time, if it doesn't work, again, it will be one of those 30-something% of probabilities on days when they just keep going higher. That's completely a possibility. So yeah. Is that a buy bid they have put in 90? Yes. Yes. So they are a passive buyer sitting there waiting. Whether they stay there as the price gets there, and whether that's going to be today, tomorrow, Friday for NFP, that's an entirely different case. Now, you see this ADR low, that is the statistical range on the day. So that 90 level is quite a bit outside of today's range. That minimizes the possibility of having some enormously massive day. Not impossible though, not impossible, because if we do get any sort of a deal between USA and Iran, yes, we could get there very bloody quickly, but wouldn't necessarily bank on that. I would maybe like to see it stop at 95. That would be an overshoot of ADR due to headline risk, due to whatever news, hopefully positive. Like John says, pray for peace. You know, we're all praying for peace. Nobody wants crude oil above 100. And, yeah. Oil going to 98. Yeah, that's a very good possibility. There's a weaker call. I don't have 98 as my level of interest for anchored points. I do have 97 though. And that is exactly where we got to. I had it yesterday. 97 was a level from yesterday. Except yesterday it was a moderate put wall. Today is actually a moderate call wall. Go figure. So yeah, we'll see how this develops. You know, it's a bit of a quiet time now, which could be a good thing and a bad thing. But one thing is for certain, if any official comes out and says something, we're going to get some movement. Which side? I don't know. That's why I'm in 1 micro. Because I think everybody is, like I said, on pins and needles waiting for some sort of a resolution. If there's no resolution, then we're going to be back up to 105. In which case, this is wrong, and that's fine. Gonna get smacked on the face by 120 bucks. And we carry on like nothing happened. You know, you can't get upset about losing trades. If you're doing that, you need to work on not getting upset. Because you're going to be wrong a lot. The markets will change. The markets will humble you. The markets will not do what you want them to do. Boo-hoo. And, you know, a lot of people who are very successful in other areas of life, they start behaving like 3-year-olds throwing their toys out of a pram when they lose a trade. But step outside of yourself for a second and take a look at everything as probabilities. First of all, do you know the probabilities of the setup that you're getting involved in? Is it a coin flip, or does it actually have some sort of, edge to it? If it doesn't have an edge and you don't know what the probabilities are, I would argue that you're not trading seriously enough. So, you know, you want to do this job, it's more like accountancy. You're like, okay, what do we have for today? What did this thing do? What do I see normally when that happens? And then I just sit on my trades. I usually joke. I try and sit on my trades until the cows come home, which means bigger targets, right? Which are heavily aided with the options levels, of course, but still. So in your view, going to 97. So look, there's a strong possibility of a deep pullback. Those pullbacks traditionally are anywhere from 200 to 400 ticks. In the most recent times, they're about 400 ticks. When we were in less crazy times over the last 12, 13 years, it was like about 200. So yes, it could get there, but if the time comes for me to get too close to the NYMEX and I'm nowhere near 97, I'm just going to take whatever is there. I'm not going to be like, I'm going to get 97 or bust. That's not a good way to live, right? So you need to, get a good old drop, right? If it drops down to initial balance, 98.60, and it's just not really advancing more, I will take it wherever it is from my entry to 98.60. I don't care. It's some cash, right? And some ticks. But if it just drops like a stone all the way down to 97, I have my limit buy just above that. We'll see. Sometimes they pull it back to 50% of London range, or London IB, initial balance, first hour of trading, and then they bounce it. So if that happens, it means that I have to manage the position around 98. But the management is just take it off. That's all the management I'm going to do. And if I'm wrong, yeah, smack on the face for the stop loss, right? And be okay with that. Totally okay. John says moo. I was mooing on the stream the other week. That was hilarious. Somebody asked me, because I had one of the dogs with me, and I was wearing my cow hat. And they asked me, so do your dogs react to you? Like, let's say you were to make a cow noise whilst wearing a cow hat. Would your dogs react? So I took Manny, who's a little tiny black and tan boy. He's a Cavapom, half Cavalier, half Pomeranian. He's our smallest boy. Well, not quite, because Mom is the smallest, but yeah. He's one of the minis, as we call them, one of the minis. So I put him on my lap, I put the hat on, and I went moo. And he just cocked his head, and he was like, okay. So no, he didn't. He didn't react. All right, Chad, settle down. Settle down. Get your mind out of a gutter. I'm going a little bit into the wrong tone here, so let's pull it back. What is wrong with coin flip if you manage risk? -1 hour tail, +2. Nothing if you have a positive risk reward. Absolutely nothing wrong with taking coin flip trades. Now, that's entirely personal to the trader, right? I like to have a little bit more, but during this time of day, especially on metals, I do say that you have a 50-50 chance of it going either side. The only redeeming quality for mean reversions on metals during this time of day is that the mean reversions have more excursion, more favorable excursion. Very fancy word for saying the swings are larger, right? Rather than going for a continuation that most times doesn't go nearly as far. So, if you're aiming for a bigger setup and you're aiming for do or die, there is absolutely nothing wrong with taking 50% probability trades, right? I do it all the time. That's why I'm sitting at 48%, because I'm actually slightly lower than that. But my risk reward, as we've seen in this current XFA, average RR, are there any pirates in here, is just over 2R. But at the same time, the trade win is 48%. But it works out because it's on a seesaw, like it's on a balance. So the higher your risk reward, the lower your accuracy tends to be over time. But by the same token, the higher your hit rate, usually the lower your risk reward. And again, nothing wrong with that either, as long as those two numbers match up, right? You can't have low accuracy and low risk reward. That's never going to work in a million years. And you're going to be very miserable. And you're going to feel very bad about yourself, right? So anytime you're shooting for 1-to-1, you really need to have hit rate of over, let's say firmly over 60%. Because at 56% with commissions and everything that happens, unfortunately, you're looking at a losing system, even though you're 56% profitable. That's an excellent hit rate. But the risk reward is letting you down. Okay? I do see a lot of posts, I mentioned this yesterday, a lot of posts on Twitter who are like, oh my God, since I went 1-to-1, I'm profitable. And then they go on to say how trading with a high R doesn't work. Yeah, it doesn't work if you suck at trading locations and you're just a momentum trader trying to catch a small piece of the move. You can't hold a 2-hour trade and do a breakout trade, right? Breakouts generally are short-lived before pretty massive pullbacks, and then maybe more continuation, but not without the pullback. So if you get very good at just scalping the breakout and getting out, in and out, take your money and run, there's nothing wrong with that. But the problem comes when you're still a breakout trader and you're not taking the 1-to-1s, and now you have a crappy trade location and you're trying to shoot for 3R. Okay? So that becomes a problem of trade location selection. But if you're careful with trade selection, and I certainly am, I will try not to get involved in the middles of the middles. I will always try to get involved at areas where I think it's a natural swing exhaustion, and we're looking at a potential pullback. Like, for example, you smack into a large call wall around VWAP in the vicinity of the NYMEX value, even though we haven't reached it yet, but we probably will later on. And then we had a very nice rise with no speed bumps along the way. That means that you have a clean move for the market to move exactly where it came from before it does anything else. Okay, so trade location selection is the distinction between running higher R trades, and when I say higher, I don't mean 5, 6, 10 R, because that requires even more selectivity, and it requires you to be on the side of the larger time frames, and then looking at these turnaround swings on the daily and weekly chart, and then catching that intraday. It's like a whole other level of skill, right? But just some critical thinking if you are aiming for a higher R. I usually go for 2R, but I will take a single. Hell, I will take a 0.5 if it's a range day as well, and it hasn't quite moved into a proper rotation. I don't, I don't pin my style to any particular risk reward. Sometimes I will be sitting at 60%, like I was in this combine that brought me here. I think it was even like 62, 65%, but as a result, my risk reward was smaller. It was sitting around 1.3, 1.2. It just so happens that right now we have the market conditions that enable me to have extended movement, which is why I'm getting lower accuracy, because I try a couple of times, but most of my tries are either pretty small or they are just on a core position, so I don't add into it. And today I don't want to be adding into anything on crude oil because it's so volatile and so subject to headline risk that there's no point adding anything. So it's the righteous one says Rip trades like that. Yeah, he does, and he's amazing at it. So if you can do the same, and you can sit there and watch something go for another million ticks without you, which I can't. That's my pet peeve. Then that's your style, and that's absolutely fine. I can't trade like that. That tilts me, right? I try and scalp, and I scalp like, 20, 30 ticks out of something, and then it moves to the target that I originally had, and I just go, yeah, this is not working for me. So we're all different. I probably have a bit of an unusual tolerance to sitting in trades, and I think it comes from the fact that I started out as a swing trader, holding trades from anywhere from like 2 days, 2 weeks to a month, couple of months. And I got used to the fact that patience needs to be a huge part of waiting for more movement, because more movement will not immediately happen. More movement is always a time thing, right? So if you're aiming for, let's say, 200 ticks in crude oil, but you only want to stay in it for 30 minutes. On most days, the movements inside a 30-minute candle will not be 200 ticks. They will be 100, 80, 55, and then when we're in a lower volatility, 30, 40. So if you want a bigger move, you need to stay in longer. It's just the data. I don't write the rules, yeah? So, you have to pick your battles when you want to trade the way I trade. And it's not easy. Many times, crude oil will be, excuse my French, dicking around a level. And I do have a cutoff point of 4 hours, that if it hasn't really done anything in 4 hours, I'm like, okay, it's time to bail. But I will try to stay in for as long as possible. Okay. All right, we're getting some weakness here from that VWAP area. Let's see what they do around 99. Then we have a pain point of initial bounce high. But hey, at least we have a move away from VWAP. Trading Nickel says, I've had periods of scalping that I did well, but you just said something key. These days when I try to scalp, it tilts me too. Yeah, because you're seeing the market in a different way and you're seeing bigger opportunities. So you're like, sorry, he's coughing. You alright? Oh dear. Yeah, I think this is going to be his last year, unfortunately. My poor baby. Hey, he's lived a long life. He's 13 and a half, which is ancient for a Cavalier. So yeah. Yeah, so Trading Nickels, you're seeing the market through a bigger time frame now, and you're seeing the potential for it to go somewhere. And if the case is that you're mostly getting those moves, then again, stay in on them. You know, less trading, more ticks. That's always the name of the game. But the problem comes when there's no volatility for such movement, and then you get a year and a half of crude oil doing $1 a day. That was fun, wasn't it? Christ, man. If I, like, my whole reason for existing was tested during the last year and a half. I just couldn't believe that a market that I've traded for over 10 years suddenly went from 300, 400 ticks on average to like 100 ticks during initial balance and then 30 for the rest of NYMEX. I was just like, is my internet on? Like, what kind of twilight zone did I walk into? I don't know what that was. Honestly, that was very strange. And yeah. Dark Penance with a good question here. My thoughts on trailing the stops. I'm personally tilted by that as well, because again, you will get at least one retest of my level before it carries on into a bigger target. So whenever I moved my stop to break even, and I did that even as a swing trader, and I learned not to do it. Why? Because there's always okay, let's not be so generalist. Most of the time there will be at least one test of the area where the move came from. And then what? You get stopped out, and then it creates the real move, picking up more speed after picking up more orders there to get more legs to go further, and you're not in on it. So to me, that's worse. Okay? To me, that's like, I was right. I, again, dicked around with a stop. Hulk calls it lending, which is a much better version. I try not to swear here too much, but it is the right name for it. Mess around with a stop, overmanage, and what you do, you kill the trade, and then you have diddly squat to show for it. So I stopped doing that years ago. Every time, for some strange reason, when I think maybe I should trail my stops because I read Twitter too much, and then I try and trail my stop, and the same thing happens. It hits my trading stop, I get like $2, and then I miss out on like a grand. So what's worse for me? The worst thing is for my hypothesis to come true, to the tick in many occasions, and me to not be in on the move. It kills me, man. Kills my soul. It's like, just stab me right now. Gonna go jump off a bridge. But that's me. You know, some people are more comfortable taking a stop out via a trading stop than being outright wrong, or, you know, not taking some profit. We're all different, right? But for me, I am super miserable, and I mean super miserable, when the trading stop hits me. And you know, some of my products you can't even trail a stop safely. Look at these kind of moves up and down. So also consider my risk model, right? Here I'm using 120 ticks. What is the average movement that we're seeing across a 30-minute time frame? I have the ATR of 9 here. It says over $1. So the range, average range, is wagging over $1. Where do I trail this safely in light of that data? Now? So now what if this thing bounces off the initial balance, retests my level, and then it goes all the way back up? I have negative risk reward. The time is not right yet for me to cut this because I will cut it closer to the NYMEX Open. Maybe earlier because I do think we have a release at 1:30 p.m. London time, which is about half an hour after I finish the stream, and into the opening call, where you will probably see Hogue again. And so it's like, you know, I just don't know how you would safely trail that without having over 100 ticks in profit. Because, you know, your scaling stops thing shouldn't really be way outside of the ATR of whatever we're doing. I use 30-minute ATR for this purpose. And, you know, now if I move it to the break even rather than taking it off early, again, yes, it's negative risk reward, but I will be then trading the stop to what, break even, and getting absolutely nothing if that retests, instead of me getting maybe $100 if I take it off early. So which one is the better result? You end up with plus 100 for a buffer, or you end up with diddly squat. Again, to me, the diddly squat part is the problem, right? I would rather get a stop out. So for me, personally, not for you, not for anyone else, right? Just for me, trailing my stops is a mental trigger for tilt. So I don't do it. If it helps you, if it works for you, you probably have a very different style to me. If you're a more scalper, if you're a breakout trader who takes quicker profits and you don't sit on your trades until the cows come home, hey, trading stops is probably your jam. Why? Because you want that quick movement, you want to protect it as quickly as possible and then take profits. Done. That's not my style. So it will depend. It will really depend on how you trade, you know. I'm just here to share how I trade. That's all. It's not, hey, do it like me. No, don't do it like me. In fact, I doubt that most people can do things like me. I think trading nickels is very similar to me because I've gotten to know how he trades through these streams and he's always here. And it's like, you know, how come my ATR is 9 instead of 14? Because as we're coming into the London session and I'm using a 30-minute time frame, I don't want the entirety of Asia. I want it sort of weighted towards the last 9 candles of as close to London as possible. So for me, 14 is too much and it doesn't give me the number that I want. This is all tested through data and through probabilities. All right, so deeper pullback is on the cards now. Here we are at initial balance. Now the question is when they step in, and this is the point where I have to start watching order flow. Talk more on moving stops to break even at 1 hour or after taking out key levels. This has been the last part of the refinement process. So again, if you're shooting for more than 1 hour, depends. Okay, so trading has so many like different points. I'm going to take this off. We are getting some buyers here, so I'm just going to grab whatever I've got there. Start the New York session with 297, and then we can talk, right? Another reason why I killed it is because my attention is now going to be split between talking instead of staring at, you know, what the orders are doing, and, you know, just grabbing a few ticks and being done with it. Why do we not have access to closing our positions individually? You do. You can right click, either stop, sell, or limit buy. Depends on what you're trying to do. Or, you know, stop buy, stop sell, or limit buy, limit sell, or drop down to one contract and then do the opposite market order from whatever you're in. So I don't know what platform you've used it before, but that's how futures operate. Yeah, so let's get back to JKX's question. If you are talking about something taking out key levels, go back and test how the price behaves after taking out key levels. Does it just cleanly slice through them? Most times. No. So what does it do? Slices through them, then bounces back, then carries on. So if you can find a way not to get whipped out in the pullback after taking out the levels, and that's because of the liquidity vacuum. You usually have a bunch of stops right underneath those important price points and then nothing. So either the short side or the long side, depending on which side they're breaking, needs time to build more power. That's why the pullbacks happen, because there's nobody else to carry on. At those times, you will find that trailing stops, unless you're just taking quick profits, you're better off just taking the profit. So you got the smash through, take the profit, and then wait to get back in, right? I hate doing that. I'm heading towards like the last 5 years of my 40s, right? So I'm on the wrong end of my 40s now, and my brain just doesn't work that fast anymore. I've been trading for almost 20 years, and I know that I like slightly less stress and less management. The fact that it took me 2 years to get used to scaling into positions and getting comfortable with that. Now I'm reasonably comfortable. So I'm okay with scaling into positions, but at the same time, I'm still not comfortable trying to outperform the market with every single movement that I'm seeing. I can see what's happening. I just find it incredibly exhausting to get involved in that. I would rather stick through the break of the big level that I might have front run with a trade ahead of it, then wait for the pullback whilst I'm still in a trade, and then wait for the continuation, then go in once, take some profit, then bounce, then go back in again. To me, that's just like, so much work. I'm a bit of a lazy trader, That's probably a good thing. I don't like to trade a lot. When I trade a lot, it's a range day of some sort, and it's always like, by the end of it, I'm like, I'm going to bed at 8 p.m. It's like just so tired. And so if you find that you can survive the pullbacks after the takeout of key levels, and then a continuation starts happening, maybe that will be the time to trail your stops. But please test all of this, right? Go back. This is what the back testing can be all about. Functionality of the trade, not to kind of go, hey, I'm going to back test, therefore I will never be wrong and I'm the king of the world. No. Backtesting is to test the functionality of something that you are using as an idea. For example, JKX. You're testing the idea of trading the stop after the market takes out good levels. So go back in time. And see how the market behaves when it takes the levels out. What would the stop trail need to be? Find some kind of a measurable data point. What was the ATR at that point? You can use 5-minute ATR. I like 30 on a 9 periods time frame, but you can use the standard 14 periods on a smaller time frame times 2. Maybe that can be your stop trail or your stop loss as well. Coach Paul uses that a lot as his stop loss definition. So, just test out the functionality of the idea. Does it work? If it works, then work towards the next stage. Continue trading in your funded account. I know that you've been consistently profitable for 3 months, so that's an amazing achievement already. And now whenever you're refining something, maybe test it in a combine first. This is why many of us, every so often, you will see us in combines. And then, the keyboard warriors are always like, why are you in a combine? It's like, well, I'm testing new things. I'm not going to test it in a live account where, you're putting a lot of skin in the game anyway. And, in this case, you're getting like XFAs and stuff and you want to get a payout. You don't test new things in the existing funded account. You test them in a safe environment. Then when you prove it via either passing that combine, ideally, or at least just having like 2 weeks of forward testing. So showing up, waiting for the event, in your case, take out of larger levels, and then seeing how the trail works in that, let's call it out of sample data. What's out of sample data? Well, you backtest something, and then you go into the live markets and you trade for a smaller amount than of time than the backtest, just to test whether that would actually work. That's called out of sample data. Okay. I took profit on Andreas, yeah. So I took, I don't know, 113 bucks on it, so 113 ticks, plus minus some commissions there, and yeah. So I was talking as well, and we're reaching initial balance. I saw some delta that was starting to kind of go sideways, and we still haven't gone into the initial balance. So at this point, maybe this is all we're gonna get. So yeah, I close it. So I was up 118, I think, as we came to do the stream, and now I'm up 297. So that's okay for a start. Gives me a little bit of a buffer to work with. All right, let me catch up with chat. Okay, they're just responding to Mini Manux. Okay. My sister is in chat. Thank you, Sandy. And okay, JKX saying thanks. D, how and when did you come up with your chart colors? Look, my chart colors, as long as they're not red and green, I'm good. But usually I like white charts with purple and blue colors. But people don't like white charts. And I actually got called a psycho for using white charts. But the real colors that I quite enjoy are these. But they don't show up as well when I put the same colors here. They were a little bit, I don't know, to me they were a bit tough to stare at. It was causing eye strain. So I decided that I'm going to use blue and orange. Purely because it's a high contrast color and it doesn't tire my eyes out. And yeah, so it's just something that moves away from the standard green, red. I have a horrible association with red color. And I tend to start thinking I'm the queen of the world when I see green. So I try to block out anything to do with colors, if that makes sense. I know it's a bit weird, it doesn't affect everybody, but it certainly affects me. I don't even like looking at the trade like ticks as they're moving. So what I do, I put like markers away from the actual execution platform, and it just stays like static. So the price moves, but the only thing I can see is the location of the current price in relation to the trade. And somehow that makes me not freak out. I don't know why, but I'm just a little strange that way. But yeah, I do like to move away from green and red. I absolutely hate it. Encrypt, I use those same colors. I don't like seeing red on the charts, yeah? Me neither. Alright, so we've done one trade. We can still hang for a little bit longer. Yeah, so I'm gonna hang here for probably another, let's do another 5-6 minutes. So if you've got any questions, let's do that. Sue says, I also get triggered by colors. I have blue and green on my charts. Maybe I'll change my green as well. Glory on its way says, guys, I haven't showered since last month. Thank you for the update. Is there any particular reason for it? Are you stuck in a jungle? Are you using Starlink and coming to us from the depths of an Amazon forest? Like, what is going on? Or are you just like sick and something is preventing you? Or maybe you don't have water. Did they switch off your... Like, so many questions, right? Oh, Encrypt says, I didn't realize you could make custom OCO brackets. Yeah, so if you click on here, so if I were to switch to position brackets, that was the original way the Topstep X worked, where you drag things up and down. This, if you're on position brackets, should show up, switch to OCO brackets, but then you have to create your own, okay? It won't just be there. So you have to go add bracket name, so you name it, whatever you want. You give it stop loss ticks, take profit ticks, and it all works in ticks. You can do dollar amount as well, but I do ticks because it's more scalable. So yeah. And then once you set that, you close it, and then they show up here. Much easier, right? Oh yeah, I see Encrypt. It's the first day of the month. He showered yesterday. I get it. Yeah, okay. Listen, guys, on Monday I thought it was Tuesday, so, you know. I'm not really in it, like, yes, of course, it's April Fool's. How many trades do you usually take per day? Depends on the day, but generally up to, like, okay, so on average, I would say, let's say 5, okay? That's across different products, not the same product. If it's more of a range type day, I haven't been known, again, across different products to do up to 20 core setups, but it's because it's a range, so you're taking smaller chunks of the market. On this one, this platform shows every scale in as an add-on, and there's really not a lot of trades, but just keep in mind that I do scale in and out. So obviously today, 4 trades, I did scale into the first crude oil trade, then my Cavalier freaked out, so I had to go and deal with him, so I cut it early. Yesterday, 7 trades, that was really scaling into copper, and then a little bit of scale in, it was just like a 2 scale in into crude oil, and that showed up as 7 trades, but it was actually 3 trades on the day. The previous day says 11. This was actually about 5 trades, maybe, something like that. And then again, very consistent, so you know, very consistent. You can see when I'm struggling, ended up minus 61, very small, basically scratch day. But I did 20 trades, which wasn't 20 trades, it was probably more like 10. But I kept trying to figure out where the market was going, and it wasn't really playing ball. Have I got my accounts copied? No. So here's the thing. I've been live twice with Topstep, and because of the way my consistency is, when I'm in excellent periods, I end up in live accounts very quickly. So last time I decided to run 3 XFAs and took a decent chunk in payouts, and then they put me live 40 days in. So I think I took, I don't know, overall maybe 20 grand out of the 3 XFAs. But then I was using 1 XFA for London, then using the next one for New York session, and then using another one for Asia. So what I found is that I was actually doing quite a lot of trading across all 3. And when I added up what I was doing, I was leaving the London session at like plus 200 if that trade worked out, but then I might have had a losing day in the New York session. However, I still had the XFA that has plus 250, right? And I kept tagging between them, and all 3 were profitable, which got me into live. Now, once you get to a live account, you only have 1. So there's no more flexibility for you to use 1 for 1 session. Everything goes into 1 account. That, quite frankly, messed me up, like big time, because I got used to using multiple accounts to manage, you know, whatever. That doesn't work if you only have 1 account. So unfortunately, this time around, I decided, you know what? It doesn't really matter, right? We can not get to a live account before there's a 10 grand balance anyways in the XFA. I'm not burning for cash in my life. I'm not like living on the breadline waiting for the next payout to hit me. So with this exercise of ending up in live accounts in one account, I decided that I'm going to only run one XFA. Why? Because then when the transition to live comes, it's still only going to be one account. So whatever I'm doing in the XFA, nothing changes. Nothing changes, right? I will still be trading the same size, micros, and if it's a, if it happens to be a larger balance at the time and I'm starting with 20%, that's still going to be like, let's say 10 to 13K, worst case, right? At that point, I will go down to my initial risk, which is 2 to 3 micros until you build up the balance. So basically, it's starting over, right? And I don't copy accounts because, again, I end up in live accounts pretty quickly. And I just don't really think that that's a good exercise for me, because it really affected me negatively last time, because I felt like the live account took away that flexibility. And this time around, I want to make everything that I'm doing in prop as similar as, or the same as it is going to be in the live. So, yeah. What's my usual dollar risk per trade? Doesn't quite work that way. It means, like, let's say that on copper, I will risk more because it's a slower product. So I might risk up to 300-400 on copper trades. However, on crude oil, I'm risking 120 up to 250. So smaller size. But it's the speed of the movement. It's speed of the movement, because I know that copper is more stable and it's not just going to hit me across the face when the headline comes out. And I can effectively just stay grounded. How does Hope put it? Stay grounded, centered. The dogs are back from doggy school. It's my time to jump off the stream as well. But yeah, the dollar amount for me is not necessarily the most important thing. It is how the thing moves, how much can I risk, and it will be floating depending on the speed of the product. So hopefully that helps you. All right, that's going to be it for today. I'm going to make way for the daytime show and for the opening call. Thank you for joining me. We managed to do one trade. We have a bit of a buffer. Let's see what the day brings and what sort of craziness they bring us today. Are we going to see crude oil stick below 100? Not sure. Not sure. I'm a bit skeptical about that just because of the structure of this day. So we're going to need some good news in order to really stick below 100 today. Yeah, I've got nothing else to say. You will see me on group coaching later on at 12 p.m. Central. That's 6 p.m. London time. Until then, have a great day. Let's see what the day brings. This was the Metal Markets on Market Stalker D. This was Topstep TV, and my dogs are saying, have a great trading day. Take care.